Most people don't realize it, but the very first question they ask about trading puts them at a disadvantage before they ever even place a single trade. The question is, should I be a day trader or a swing trader or an investor? And although it sounds harmless, that question quietly puts them in a bad place. Because the moment you put a label on yourself as a trader is when you start trying to work the market to fit that identity. But the market doesn't work that way. Price always moves on its own. And your job is to stay flexible so that you can respond to what the market is doing and not how you feel that it should. A lot of trading content tells you to pick one style of trading and stick to it. You can call yourself a day trader, a swing trader, or an investor, but that approach locks you into a single way of thinking while the market is constantly changing. So let's slow this down and define each one clearly. A day trader is someone who buys and sells a stock within the same day. They do not hold anything overnight. Every trade is opened and closed before the market ends. A swing trader holds a position for a few days, sometimes longer, with the goal being to let price move over time instead of rushing in and out. A long-term investor holds for months or even years. This usually comes down to how strong the company is and whether it can keep growing over time. So yes, there are definitions, and they are very real. And this is where many people run into problems. They don't just use these definitions and learn these styles of trading. They start to see them as part of who they are, and say things like, I'm a day trader, I only do swing trades, and I'm an investor. And once they latch onto that identity, flexibility starts to fade. Now, instead of reading and going with what price is doing, they start forcing trades to fit the idea of who they think they are. A day trader may exit too early, even when the move is still building. A swing trader will hold on for too long, even when the chart is starting to weaken and is starting to break down. An investor will ignore warning signs and hold on because they believe in their long-term story. In each case, this type of thinking pulls attention away from the chart, and without realizing it, they stop listening to what the price is actually showing them. This is where Chart Whisperer is different. We don't begin with identity, we begin with behavior. Because the goal is not to prove what kind of trader you are, the goal is to protect your money. Protect your capital first and only commit more when the market starts to confirm your idea. You are not here to force trades. You are here to manage how much of your money is exposed, with patience and discipline. That means starting small and only adding more when price, volume, and momentum begin to line up. A trade is not defined by how long you hold it. It is defined by what price is doing, how volume is behaving, and whether momentum is building or fading. Sometimes a good opportunity lasts only a few minutes. Sometimes it develops over a few days, and sometimes it continues for months. That part is not up to you to decide. The market decides how long a move lasts. Your job is to stay in tune with what it is showing, and that is the shift most people never make. You are not stepping into a label that defines who you are. You are stepping into an environment that already is. Some environments are very strong and trending with purpose. Volume and momentum continue forward. Some environments are slow and choppy. Price moves back and forth without a clear direction. Some may look active at first, but volume is weak and moves fade quickly. And some environments are not stable. Prices move suddenly and unpredictably. This is where discipline matters more than trying to find opportunities that fit that label. Your job is not to decide who you are before entering a trade. Your job is to recognize the environment right in front of you and respond to what it is actually doing. So instead of asking, what kind of trader am I? Ask a better question. What is the market doing right now? Where is price relative to structure? Is participation real or is volume weak? Is momentum building or fading? Your job is not to predict what happens next. Your job is to read what is happening now and respond with discipline. Here's a simple way to approach it. Start by marking your level, which is an area on the chart where price has reacted before. Then wait for price to come to that level. When it gets there, slow down and watch how it behaves. No rushing, no guessing, no chasing. You wait for the market to show its hand first. And when it does, that's when you decide how much capital to commit to the trade. When you slow the process down, the market feels more structured and less random. Here's the shift that changes everything. You are not here to prove an identity. You are here to make clear, disciplined decisions. If the move is quick, you take it and step aside. If the move is steady, you stay with it. If the environment changes, you adjust. No ego, no labels, no attachment. Just watching what price is doing and responding to it with patience and control. That is where control starts to come back. Not from trying to predict and not from labeling yourself, but from staying flexible enough to follow what the market is actually doing. Because the market doesn't reward people who call themselves traders. It responds to people who understand behavior. And over time, that shift does more than improve your trades. It clears up confusion, reduces hesitation, and helps you make decisions without constantly second-guessing yourself. And this is where it really matters, because this isn't just about trading. It's about learning how to make clear, disciplined decisions in an environment that doesn't adjust to what you want or the way you need for it to behave. So if you've been trying to figure out what type of trader you should be, pause for a moment. You don't need a label. You need awareness, you need structure, and most importantly, you need the ability to adapt. Because in the end, the trader who survives is not the one with the best identity, it's the one who listens to the market the best. So if you've been trying to figure out what type of trader you should be, or what name to call yourself as a trader, stop. That question is pulling your attention in the wrong direction. The moment you let go of labels, you give yourself something far more valuable. The ability to observe, to wait, and to act with clarity instead of pressure. Because in the end, this isn't about identity. It's about decisions. It's about learning how to read what's actually happening and having the discipline to respond when the market gives you confirmation. Not before. That's where consistency begins. That's where confidence is built. So if you're ready to stop guessing, stop forcing trades, and start understanding how the market really moves, subscribe to the channel. Because here, we don't chase the market, we learn how to listen to it.